So hello, my name is Paul Leeson, Leeson Real Estate, brokered by Berkshire Hathaway Home Services. I'm a realtor in the Grand Rapids area, and I'm joined here today by Brendan O'Driscoll.
Hi, Paul. How are you?
I'm doing great, thanks.
So my name is Brendan O'Driscoll. I'm with Treadstone Funding in downtown Grand Rapids. We've been around for a long time, almost 20 years, and I've been in the business a little bit longer than that. And I will tell you that Paul Leeson is one of the best agents that we work with. Paul really knows his market from your normal single family homes, cottages, but he's also an expert in investment properties. And Paul is a sweetheart of a guy. He's got a cool British accent, and he's one of the most honest people I would ever met. So I couldn't recommend him any better. He's just a joy to work with. So.
Well, I appreciate that, Brendan, and it comes right back at you. You mentioned working with teams and working, getting the best people on the team, and that's one of my pitches to any clients is having the best team put together. Just like for football, baseball, you want the best players on the team, and the team is built up of your lender, of your realtor, but then also title, inspectors, if you use inspectors these days. Just everyone who's working on the team. We'll have a transaction coordinator who works in the background. Make sure all the whole transaction is moving forward at the pace that it should, so that we can hit close on time. I've done many deals with Brendan and his team, and both on the buy side and the sell side. I just closed a deal, a listing yesterday, and the lender was Treadstone with one of Brendan's team. And it's funny that when I'm looking at offers as a listing agent, when I'm looking at offers, I'm also looking at the lender. If I see Quicken Loans on there, I kind of cringe a little bit. I like a local lender, someone who I know who's in the business locally and that I can trust. And I can also pick up the phone or even drive into the office and speak to the team. And yeah, Brendan, I see their name on a lot of offers. It's just because they're so well known in the industry and they're trusted. And I'd prefer to work with a trusted supplier or lender than an unknown, like Chase Bank. I bank with Chase personally, but I wouldn't use them for my mortgage. So yeah, we work and have worked together great as a team in the past years. So look forward.
I bank there as well, and I love them as my bank. But a lot of those banks prioritize their mortgage department probably around number 8, 9, or 10 on revenue streams, where that's all we do. And you're not a commodity, and I'm not a commodity. I mean, this is the biggest thing that people do. I mean, obviously, usually one of the biggest purchases of their life, if not the biggest one. So trying to find something online that works in a competitive market is just not going to work. And even if your parents bank at ABC Bank and have known that person at the branch for 30 years, that person has nothing to do with getting the mortgage approved. So they might not even be in the same state, and sometimes even the same country. So working with somebody local who's got control of who the appraisers in the group are, because they're local, and their underwriters and closers, and just kind of a group that just works on a residential mortgage, it leads to a good transaction on time, everything that you would expect from anybody, but you don't get from everybody. So
exactly. So to quote your expression, think team, who's on your team, who's the best players working in your best interest. But the reason for this video today, I guess, I get a lot of questions, as I'm sure Brendan does, about the market today, how difficult it is, how much of a seller's market it is. And then it's very easy to sell a property, but less easy to buy a property. So different situations there that we want to cover today, probably in the next 30 minutes or keeping it into that time frame. So number one is like sellers. A lot of sellers are afraid of selling their property right now just because of low inventory. In Grand Rapids, we're at about 0.5 of a month, half a month of inventory, which means that if we put a freeze date right now on all properties that are currently on the MLS, it will take 2 weeks to exhaust all our inventory, and we'll be left with zero properties. So even though it's very easy to sell, it's less easy to buy. So a lot of sellers are saying, well, I'm gonna stick in my property because if I sell my property, I won't be able to buy one. So my strategy for that has always been get your house ready for sale, prep it up, make it look nice, do all the honey-do lists. So make it look really good. And then once it's there, we can have all the paperwork set aside, ready to go. We're just going to put a date in there and then we're going to sign it once you're ready to list. But in that time, then you go look for your next home, your dream home, whether you're upsizing or downsizing, you look for the next home. And then once you have that, found that home and got it in a contract, then we put your house for sale on the market. And then it's my job to time out the purchase and the sale. So ideally you buy the house a week or 2 weeks before you sell your house. And then that gives you 2 weeks to move all your possessions once, right from your current home into your new home. A lot of people shirk on this or get worried about having two mortgages or a bridge loan because of the expense. But I like to break that down and say, well, number one, you don't need to get a rental if you sell your current home first and then buy. You have to find a rental. Rentals are very hard to find at the moment and very expensive as well. I'm a landlord and the rents are insanely high. And I have people call me all the time looking for someone to rent, but there's, no room at the inn. Everything is taken and people are not moving because of that same issue within the rental market. So finding a rental dwelling is going to be difficult. Then if you do that, you have to put all of your possessions in storage. So then you have to rent out a storage for how many months? 1, 2, 3, 6, 12. That cost builds up on top of your rental cost versus what your mortgage payment is. It's going to be a lot lower than those two costs combined. And then the other thing is, I think if you're in a rental and then you feel the pressure of wanting to buy, are you forced into buying a property that you don't want versus go out and picking your home, then selling your home afterwards? Your home will sell. So when we're talking about that strategy, we look at different or ways of working the monies. And this is where Brendan has different options there for either bridge loans, doing a HELOC. And why don't you talk me through that?
Yeah, so I mean, in this market, when there's multiple offers coming in, if you have to sell your house because you don't qualify for both house payments, or you absolutely need the money out of your house to get into the new house, you're going to end up with a contingent offer, contingent on the sale of your house. That becomes difficult to accept if there's 9 other offers that are non-contingent. The seller wants to know that they don't have to wait for you to sell your house. Now, Paul will tell you, and I will tell you, it's very rare that your house is going to sit on the market unless you overprice it, because it's going to sell fast. So the timing can sometimes work out, but we're talking about getting an offer accepted. So one way we look at it is if you can afford your old house payment and your new house payment, don't freak out about having 2 payments because it's probably not going to happen. You might have a 1-month overlap is what we're seeing, but the idea there is one, we could just say, hey, if you have, as little as 5% down, sometimes even 3% down, let's just get your new house under contract with a minimal amount of money. You want to put more money down because you have more equity in the house that you're going to sell, but you can't get at it right away. So if you qualify with a lower down payment, we'll get you qualified. You do a non-contingent offer. And then after you sell your house, you take the proceeds and dump it on your new mortgage. We remove the dreaded mortgage insurance, and mortgage insurance isn't that big of a deal. Our parents and grandparents tell us we have to have 20% down. That's, if you're renting and you have to save 20%, you only have 5%, you're going to spend 30, 40, 50 grand trying to save 30, 40, 50 grand. And that's a kind of a wheel you can't get off of. So the idea is to get into a house while the interest rates are really low, and then you can transfer that money over. And it might even work out, as Paul said, timing wise, like I close loans in 15 days generally on purchases. So if we got the buyer of your house, slam the door, close it real quick, and then instead of 5% down midway through your new purchase, we say, hey, we're going to change that. We're going to put 25% down because we're going to have that money a couple weeks early to transition over. So I hope this is making sense. The other way you can do it is to do a bridge loan. So if you have a lot of equity tied up in your house, we can take some of that out and use it for the down payment. And then when you sell your old house, you pay off your mortgage on your house and the bridge loan. It allows for a smooth transition. So there's a couple different ways to do it. And if the scenario would be if you sold your house, if you bought a new house and closed at the end of June, because we're at the end of May right now, your first payment wouldn't be due until August 1st. So odds are Paul's going to sell your current house sometime in June or July. So you really won't have any overlapping. Yeah, 5 days. Well, Paul's going to sell it. And it really, I mean, you'll be astonished at how fast it will sell in this market in most cases. So you're not going to have to worry. And then, you can transition more easily into the new home. So I hope that makes sense.
Brendan, you mentioned low down payment. What kind of down payments are you talking there?
I mean, as you know, the basic loans are conventional loans. So a conventional loan is your typical bank type loan. It's guidelines are Fannie Mae and Freddie Mac guidelines. You hear that in the news. Usually people put 5% down. There's 3% down programs, 10, 15, 20, whatever you have. FHA loans, you can put as little as 3.5% down. If you're a veteran or an active duty service personnel, you can do a veterans loan, a VA loan, and that's 0 down. And then there's a rural development loan that is also 0 down. It's not meant for cities, but it's meant in the Grand Rapids area. It's north of Rockford, out towards Walker and west, Lowell and west, and kind of that Caledonia. It cuts in and out on a map, but that's a 0 down program for houses in rural areas. So there's a lot of different ways to do this, and we get people in, get their information, and find out what's the best option for them. And if there's a bunch of good options, we lay them all out and let them pick the one that makes the most sense to them.
Yeah, I think each case is handled individually as its own specific case. So, one loan may not work for another person. So always best to, call Brandon and ask what loan is going to be best. It's going to be the best fit for you.
Yeah, and sometimes lenders go too fast. They'll call and say, hey, they said I have to put 5% down, or I have to put 20% down. They have different ideas. They want to put 10, 15, they want to put 30. So we got to hear everybody out and see what their goals are and what they qualify for. And if there's one option, there's one option. If there's 3 options and they're all the same, I'll let them pick. If I like one or more than the other, I will tell them why, but ultimately the buyer still has to pick what makes the most sense to them. So.
Yeah, from my standpoint, if I'm representing a buyer and they're putting 5% down, maybe their offer looks a little weaker than someone who's put in 20 or 25% down. But it's also my job to communicate to the listing agent that they're putting 5% down because they still have their first property. They've not sold that, and they're just putting 5% down now. They're going to sell their current home, and then that money is going to be paid down. So when it's kind of nip and tuck at the end, the listing agents are looking at all the details of, well, this person here maybe is better qualified and a stronger buyer than this person. However, that's what they see on paper, but it's my job to communicate for you as as a buyer to the listing agent that my buyer is strong. They still have their first home and they have the financial capability to carry 2 mortgages. So that's the strength of my buyer versus someone who's a first-time buyer, maybe has 20% down, which is strong. They don't have a second home. So it's all about communicating my client's offer to the listing agent and putting their best foot forward.
Yeah, and since Paul and I are a team, what we do is when the buyer goes and makes their offer, Paul will send in the offer with our pre-approval letter. It's specific to that property, but I will also call the listing agent. I generally know the listing agent, and we get the buyer's information ahead of time. We know their income and their assets, and the more I have on hand, the more I can call that agent and say, yeah, it's only 5% down, but they're selling their house. They qualify for both payments, or whatever the strengths are of the process are. But I can say, listen, we're halfway done. We just need you to accept our offer. It's a strong offer. I've already verified their credit, their income, and their assets. I'm not worried about them selling their house. 5% down is no big deal. If speed helps the seller, tell your seller we'll close in 15 days, because nobody in town can do that. Now, I think that we win, Paul, at a faster clip than anybody else in this competitive market. Now, that's me tooting my own horn. I'm not going to say, hey, I'm a bad lender and I'm going to frustrate you. And I say 15 days, but it's going to take 68. You as a buyer would have to talk to Paul without me around and say, hey, what is Treadstone's reputation around here? Because because we do push that. We are very competitive, and I want you as a buyer to win. I want Paul to win. I want us all to get over the top. I'll even send a video saying the same thing. So we're doing everything we can to push you over the top. Now, if there's another offer with a huge amount of money more, obviously the seller might not do that, but an educated seller will know that certain banks, online lenders, credit unions, whatever, have a history of saying they're going to do this, but then it takes 2, 3, 4 more weeks. And the seller, you got to remember, the seller may have constraints. They may be closing on their new home in 5 weeks. They may be moving out of town for a new job. They don't always have time to wait for sob stories about, well, I'm sorry, it's taking a few weeks longer, that kind of thing. So you need the right team, and in a competitive market, you need the right team, and you need people that are good at it to help you win.
Yeah, we have history there. We have test cases where you have closed in 2 weeks. You've rescued other deals that haven't gone through. One of my first clients from years ago said that, working with you, you understood their self-employed status. She works in insurance, and she's self-employed, her and her husband. And you looked at the books and you understood their income and their, what they could afford. And she appreciated that fact that, you looked into that, and it wasn't just a straight, oh, sorry, you can't afford the mortgage. You looked a little deeper into the detail to understand from her tax returns, yes, they can afford it. So yeah, that was one example of you kind of just being a little different than other lenders, and also being able to close fast. You rescued some deals that weren't even working out, weren't going to close at all, and then picked it up and closed it down in 2 weeks. So yeah, I wouldn't promote doing a 2-week close on every deal, because that would, I think that would burden you just a touch too much. But certainly, and not all sellers want that fast close. Everyone has different needs, and that's our job, to find the needs of the seller, the buyer, and then cater the loan and cater the process to that particular buyer or seller.
Yeah, we like rescuing loans and saving deals, and sometimes somebody might not go with somebody local and get some fatigue after 2, 4, 6 months of swinging and missing, and it might be because they have the wrong lender, or some lender from out of state that no one's ever heard of, and it's not, they don't know what they don't know. So it's just good to get another opinion, and we're happy to pick those things up. I mean, my name on a pre-approval letter is not going to guarantee you a win, but I think it's going to help more than any other one around. And we're very confident in what we do, but we track everything we do, so we have data to prove this. And you're right, Paul. I mean, if a seller doesn't know what they're doing for 6 weeks, they don't need to close in 15 days. But if they can close a week or two early, and they know that they have that money in hand, and they're not worried about a back-to-back closing on the same day, it removes some stress and anxiety. Nobody wants this to be a tenuous process. I mean, we try as best we can to create an exceptional experience, and have 2 out of 3 mortgages go badly when you survey people. This is a national thing, so you don't want to be part of that 2/3. But if you can have a great experience buying a house just like any other item you buy, I mean, shouldn't that be the way it's supposed to be? And that's what we're trying for. We want it to be fun. You don't want to look back and say, oh my gosh, I don't ever want to buy a house again because that was a nightmare. It should be fun.
Right, and that's my goal, is to have every transaction that I do is to be as seamless as it can be. Then it's a pleasurable experience for the buyer or seller, versus, again, going back to the team. If you have one team member let you down, if you have your lender let you down, then there's a lot of work that I have to do to scurry around, write addendums, delay closing, and then it reflects badly on me as well. So people will just remember the deal as a whole, that it went through really smoothly. So, and that's because of the lender, that's because of the agent, that's because of the title company. So having the right people on the team is key. And you preach this a lot, Brendan. I've been preaching this, to my clients: buyer, get a solid lender. That's number one, because it will help you win deals. If it's nip and tuck, everything else is the same on the purchase agreement. And then you have Treadstone versus Quicken. Treadstone every time. Local lenders, there's a lot to be said for that, and go with a local lender that you trust and that is trusted in the neighborhood. So I guess we've worked from a seller selling selling your house and looking to buy first, then buying. How do you buy a house these days? It's pretty difficult, right? A lot of people are struggling. There's multiple bids going in on properties. I just had my last listing had 140 showings in 5 days.
Wow.
Insane. The house was probably more worn out after the showings than what it was over the last 10 years. But yeah, a lot of foot traffic through there. We had like 20 offers on that property, but there's other scenarios, lots of scenarios out there where you're having 20, 30, 40 offers. So as a buyer, how can you stand out from the crowd? Now, price is obviously right up there. Number one, price, that's what we all look at, your starting price. Sometimes or oftentimes there'll be an escalation clause on there. So think of eBay where you escalate, you put your top bid amount and then it gets escalated up by $1 a time. With real estate, you put maybe 150,000 as your starting price, 200 as your max, and it gets escalated of 1,000 a time. Not usually that big of a gap, usually 10, 20, 30,000 on an escalation. So those are the two things in regards to price. Then there's concessions. Do you ask for any seller concessions? In this market, it's very difficult to get your offer accepted if you ask for concessions. I still see some come through. Oftentimes on an FHA loan, 3,300 seller concession requested. It's not going to fly. It's going to punch you down the list. Cash conventional FHA, VA. So cash is king, but can be also beaten by conventional. So there's some grandparent money or parent money coming in, buying the house cash, and then the people will refinance afterwards. So they'll get with the lender and refinance that property once they've purchased it. But cash is king. Cash doesn't always win though. And I've been a listing agent, and we've taken conventional offers which are higher than cash offers, but they have a large appraisal gap guarantee. So when you're having when you have a property purchased with a mortgage, you have to do a bank appraisal to validate the worth, the value of the property. If that appraisal, if you bid $280,000 on a property which is listed at $250, if the value is $275 according to the appraiser, there's a $5,000 gap. So people are bringing money to the table to bridge that gap, and that's extra cash out of your own pocket that has to come to the table on top of your down payment. So in that scenario, you're buying at $280, and the mortgage will be based off the appraised value, which in this case would be $275. So you get 90% mortgage, 10% down from the $275. So you've got to bring 10% down, $27,500 plus the extra $5,000 to bridge the gap plus your closing costs. Inspections or no inspections. We as agents always advise you to take inspections, but in this market, again, things change. I like to bring my history and my experience to the table. I own property. I've done $130,000 rehabs on rental properties. So I've seen and discovered a lot of things that I don't like to see in my own properties. Termite damage. So I look for termite damage now. Stab lock breakers. Maybe there's a breaker panel which has a safety recall on it. That's a few $1,000 fix. Do you have lead line coming in on your service line? I wouldn't want a lead line if that were my family home. So that's probably a $4,000 cost to fix. So what I try and do is point out all of those issues to my clients prior to even having an inspection, even if they do have an inspection. So at least they're prepared for what's going to come through in the inspection report. And typically I'm catching at least 90%. I don't get up into the attic and look for mold. I don't take off the panel and look for double taps on your breakers, but I'm looking for a lot of the common faults on a property to give the buyer confidence in purchasing that property at that particular price. And then I also communicate to the listing agent, hey, I've seen that there's a lead service line coming in. I see that they have stab lock breakers, which is their safety recall. So if there's another offer which is higher than my client's offer, but has inspections, just be known that this is going to come up in inspections. So there's $4,000 for your water line. There's probably another $3,000 or $4,000 for your stab lock connectors to replace your breaker box. So there's another 7,000 there, which could be negotiated. So take a look at my client's offer, because they have waived inspections knowing the faults with this house. So it just gives, I believe it gives my clients the foot up when I communicate that to the listing agent.
And you've prepared them for, a minor or whatever the expense is. You've prepared them. So the nice thing is about Paul is you're almost giving a contractor's perspective, because you've been knee deep in that stuff with your rehabs and gutting houses, and you're a part-time contractor with some serious knowledge.
Right. Learn from my mistakes.
Right.
I make them once, and or discover after I purchase a house, oh, this had termite damage, or oh, this had stab locks in there, and just learning from other inspection reports that I've done over the years, and remembering that stuff, and then bringing that forward into my my current clients. Survey or not, most people are not taking a survey. If we feel that there's a boundary issue, maybe a garage that looks very close, or maybe a shared driveway, sometimes it's good to have a survey done, especially on a large purchase or a large piece of land. Definitely would get a survey. Possession is another thing. These are all the things on the purchase agreement that are negotiable items, I guess. Possession, these days the sellers are looking for possession after close, and that's because sometimes the sellers are selling prior to buying, so they want 30 or 60 days then to go out and find a home, which I always feel is a struggle, because you're never going to find and close a home in 30 or 60 days unless you're very lucky and very aggressive. Earnest money deposit is another one. Minimum $1,000 or 1%. The larger the EMD, sometimes shows that the buyer is stronger. So when I'm doing some of my purchase agreements personally for myself, I'll put a $10,000 non-refundable earnest money deposit down with no inspections when I'm buying a property for myself. And that shows that I'm serious about buying the property. And then if I walk away, I'm going to give away $10,000. So that's not going to happen. I am going to buy this property. So I've done that with other clients, or other clients have put a $10,000 non-refundable. And it just shows that you're in for the long term. You're going to buy this property. Not everyone can do that, and there's obviously risks in doing that. So it's a discussion that we have on a case-by-case basis. Appraisal gap guarantee that we've already spoken about, that is being seen in a lot of offers these days. And if the appraisal gap guarantee is not in there, you tend to go down the pecking order when there's a multiple bid situation. I've had clients that we've been bidding on properties, and we've been bidding 20, 30, 40,000 over asking price, but not getting our offers accepted. Reason being, other buyers are bringing $20,000 appraisal gap guarantee. My clients didn't have that luxury of having that extra cash savings to be able to put that down. So we're bidding high, but we're hoping that the appraisal will come through. But if it doesn't, then there's another negotiation. So that's why some of my clients have been losing out, because they don't have that appraisal gap guarantee. So again, put 5% down, put 3% down, get your savings built up so you have plenty of cash to close and an appraisal gap guarantee. And we've been seeing the appraisals come in pretty strong as well. So oftentimes the appraisal gap guarantee is not used, but it's there as a guarantee. It's an insurance, right?
Oh, I'd like to add that, when we get somebody pre-approved, we'll give you parameters and we'll give them parameters. They may want to be at 250 or 270 because they want to keep their payment around $1,300, but they might be able to afford 350 or 400. We show them what that payment is, and they may not like it, but $10,000 usually equates to 55 or 60,000 a month. But it's good for them to know that, because what if they see this gem that they want to move into and they can see themselves in there for 10 or 15 years and say it's 280? Well, yeah, for an extra $125 a month more than we thought, we can get it. We can get into that. And then they also know that they have the upper boundary to make that more aggressive appraisal gap offer if they are sitting on cash, and maybe they put 10% down instead of 15 if there's an appraisal gap. So these are all things that if people know going into, there's not a lot of anxiety about, oh, what if, reacting quick when you want to make an offer.
Yeah, and I think the other point there is, someone comes in and say, yeah, I want to buy something around $200,000. That is a super, super hot price point. Everyone's after that price point right now. So if you can buy at 300,000, your value for money is probably going to be better at 300 than it is at 200, just because people are overbidding like crazy. I heard a story the other day. It was a house on Blaine, just north of Burton, listed at 200, and he went for over 300,000 cash. And someone had offered like 290 with mortgage, with financing. Didn't get it. I would have put more than just lunch on it that they would have won that bid. But super competitive market. So if you can get outside of that, the number of people looking for that home is going to be less. So you're going to have to overbid less to get that property at a higher price point than you would at the price point in the super hot 2 to 250 market price. So if you can afford a bit more, that little bit more will probably buy you a lot more. I've seen buyer paid seller closing costs, so where the buyer pays the closing costs. I got to work this out in my head whether that is any different than just put in a higher price. Obviously, a higher price, then you got appraisal. It's got to cover. But why don't you just put that on the appraisal gap guarantee? I don't know whether they have any opinion on that, Brendan. I've seen that a couple of times, but for me, it's kind of a shifting of the money.
Yeah, if they have a good agent and can show the seller what they're going to net, sometimes it's the same thing, but it might sound a little more unique to say, hey, you're going to pay the seller's costs or the seller's transfer tax or title costs or the seller's realtor's commission. So I think it's a little bit creative, but it can all fall to the same bottom line. So
net, I believe, yeah. And then the other one is like home warranty with seller coverage. So sometimes on an older home, maybe the furnace, maybe the AC, maybe the water heater are very old. They could fail tomorrow. You put it under contract today and they fails tomorrow, and you've not purchased it as yet, you've not closed on it, then the seller has to pay for that new furnace, new AC in the summer here. AC issues, you got a 15, 20-year-old AC unit. So if my buyer puts a home warranty on it, home warranty costs $450, $500. For an extra $60, you can add seller coverage. That covers the seller up until close for any issues that happen with the AC, the water heater, the furnace. I'm not sure about appliances, but that's through American Home Shield. So if you offer that, that's another insurance or warranty that you're giving to the seller for free. So if anything comes up between now and 20, 30 days to close, your AC craps out, no problem. There's $100 surcharge. They come out, they fix it. It's all done. So that's another benefit, another small benefit that you can offer. So if you're neck and neck, that might just push the balance. And then there's buyer's letters. Some sellers will accept buyer's letters, and you're pulling on the heartstrings of the sellers there that, okay, I see this is a beautiful house. My family, we're in the, my family was in the army too, or I see your family a gymnast. I've got two young gymnasts that, we see our family just like your family. And then sometimes if it's again, neck and neck, they'll say, well, I really like the sound of this family. And I've had sellers as well who are like that and say, yeah, I'd like to see the buyer's letters because we want our home going to someone like us. And I'm like, okay, if there's a $10,000 difference, does that matter? And I'm like, no, don't show me the seller letters. But if it's nip and tuck, they may want to go with the buyer who kind of fits their house just like they have. So lots of different things, not just price. There's a lot of other little knobs and dials that you can turn to tweak your offer. And then back to the relationship. I always call the listing agent and say, hey, have you received my offer? And try and talk the offer through with them so they know me. They know that I'm good for my word and I close on my transactions. And also then Brendan follows up with a call to them as well, just to let them know, hey, we're here, we're going to close this deal. And that's why you should pick ours. And we're doing everything we can just to make ourselves stand out above the rest, above the competition.
Well, you have to do everything you can. And when you hear us talk about what we do, everybody should be doing this, but some people never do this. They're too busy to do this. I mean, a couple of months ago, I called an agent about a half hour west of here, husband and wife team, and I'd never met her before. And she called back after our offer was accepted. And she said, "Hey, Brendan, out of 24 people, you're the only one that called. You weren't the highest offer, but you made me feel so comfortable about the buyer, you know, closing on time, and that you had all their stuff that's how we won." And now I'm working with them, and I had never met them before. And it's just, you have to do everything you can in this market and any market. It's not like we just started doing this, you know,
Right.
when the market got tight, but we're doing more of it, and you have to be as thorough as possible. We have local appraisers, you know, we do, there's good and bad appraisers. We think we have all the good appraisers in our pool. So they can get things back to us in a timely manner with proper values. And, you know, sometimes that helps with those gaps and things, because this is a different market these days.
Yep. Brendan, we're almost out of time here now. So how can people get in contact with you?
So the best way to get a hold of me and my team, and I do have a team, and the great thing about having a team is if I spend a half hour with Paul and you're calling in, somebody else can pick up the phone. I have licensed people helping me, so we talk about the loans every day, so it's not like I'm out of touch. But yeah, 616-228-6200, 616-228-6200. We're here all day. I actually, we man our weekend phone from 10 to 2 on Saturday and Sunday. You don't always need us on the weekends, but you may be ready to offer with Paul at 8 o'clock on Saturday night, and Paul found out that you're with ABC lender from who knows where, New Mexico, and Paul says, "Hey, this is not going to go well. We need a local pre-approval to help you win." So those are the kind of things that we like to do. So if you call us at 616-228-6200, that's the best place to start.
Yeah, so speak to Brendan, he's the guy. If you need to contact me, 616-717-1901, or my email is paulleeson@bhhsmi.com. Website is just paulleeson.com. So hopefully this has been informative and useful for you. There's plenty of other questions, I'm sure. So reach out to one of us and we'll get those questions answered for you. So till the next time, bye for now. Thanks, Brendan.
Bye for now. Thanks, Paul. It was really fun. Thanks for having me.
Bye.
All right.